some perspective, about 500,000 companies are founded in the United States every year. About 210,000 of them are funded by friends and family and founders. About 62,000 by angel investors, and about 1,000 by venture capitalists. But when you ask people who funds early stage companies, they'll say venture capitalists. Okay? $26 billion is invested by venture capitalists in about 4,000 deals every year. So 3,000 of the VC deals are follow-on rounds. About $26 billion is invested by angels in the 62,000 odd deals that they do. I think you had a number of $140 billion that's funded. The rest of that all comes from friends and family. And what's happening in Washington, D.C. is that that is going to be able to be expanded because people who have less than $1 million in liquid assets, in other words, funds excluding their home, are just not allowed today to invest in most early stage companies. So that's to give you a background of the enormity of what this bill is about. So thank you for sharing, Dana. My name is David Beattie. I'm an entrepreneur and I'm an angel investor. I'm a member of the 4th largest angel investment group in the United States, which is called Golden Seeds. I think we're the fastest growing. And the ladies here, you'd be glad to hear, we invest in women entrepreneurs. Some men say, why do you limit your investments to women entrepreneurs? And I'll say, actually, as an investor, I have a much better, I believe I'm going to get a much better return on my investment because 98% of all venture capital and private equity companies are run, the general managers are white males. And people like to fund and be with people like themselves. And so Golden Seeds and a number of other groups are very supportive and looking to provide funding to the underserved women entrepreneur market. We spoke about investing. I'm here to speak about angel investing. It's important to know the spectrum of investing, where you get your money from. We've spoken about friends and family. That's pretty obvious. And typically what happens is that's going to be people who are investing typically up to about $250,000 in the funding universe. And then what friends and family, one of the key things to know about friends and family is that you're getting money typically from individuals who know you personally. And so they want to support you, but they also want to get a return on their investment. But primarily, they want to support you. Angels are typically, they're individuals, they're typically people who don't know you. They are looking for a return on their investment. Remember that, an investor is always looking for a return on their investment, but typically they're also looking to be involved. They're looking to help people. They want to know what's happening in the cutting edge. They want to give back to the community. There's 5 million millionaires in the United States approximately, and about 250,000 of them have done angel investments. Okay, so it's 1 in 20 millionaires will do angel investments, but they do 62,000 deals a year. So remember, the spectrum, when you're looking for money, you need to know where you're going. Friends and family, they want to support you. Angels, they're individuals. Typically, they don't know you. Angel groups are groups of angels. And then you go into venture capital. And one of the key distinctions to remember between angels and venture capital is that angels are investing their own money. So as an angel investor, I make a decision on what company I write a check to. And it's my money. It's my fiduciary responsibility about my own money. As a venture capitalist, I've got an awful lot of other things I have to worry about, including what I promised my investors I would do with the money that they gave me. And so there's a different way to look at the investment, and it's very important to see how your alignment as an entrepreneur, how you're aligned with your investors, because you want to make sure that you're working towards the same thing. So angel groups and venture capitalists will tend to work very similar in a way, in that they're going to want to do due diligence, they're going to want to do Series A, they're going to want to do equity, they're going to want to do term sheets. That venture capitalists will typically do as well, but it's a group of individuals who are making investments. So one thing I just want to also bring forth is to remember about why an investor makes an investment. An investor is making an investment to get a return on their investment. And people say, well, what are you looking for when pitching? And I'll always say, remember, when you're pitching an investor, that an investor is looking for a 10x return on their investment in 3 to 5 years, and I'll want no risk. I mean, that's what I want. And the reality from my perspective as an angel investor is that what my expectations are, if I make 10 investments of $25,000 each, I'm going to be lucky if one of them gives me a 10x return. I'm going to fully expect at least 2 of them to go completely bust, and hope that it's less than 5 that go completely bust, and hope that I'm going to get my money back on 8 of them. Those are the numbers that I live with. So when you're making an when you're pitching investors and talking to investors, just remember that in the back of your mind, that that's what the investor is actually looking for. Yes, I want to be involved in the community. Yes, I want to be able to be supportive of entrepreneurs. I'm passionately fascinated by what the companies that I invest in are doing. I want to support them with my network. I want to support them any way I am, but I also want a return on my investment. So I hope that helps give you an idea of what angel investing is about and what things are like from my perspective, and I'd be happy to take any questions.